Your roadmap to the latest in auto? Welcome to Highway Herald, where we track not just cars, but the trade routes, policies, and industries fueling them. The auto market isn't the only arena where tariffs reshape the game. Food supply chains are under fire too. And today, we're front row to one of North America's boldest pivots. Mexico, long the U.S.'s $3 billion tomato supplier, was hit with sudden tariffs on July 14, 2025, and its stunning reroute to Canada changed everything. The overnight shockwave. Washington ends the tomato truce. July 14, 2025 seemed like any other Monday, but for grocers, importers, and analysts, it was a shockwave. Without warning, the U.S. Department of Commerce scrapped the 2019 Tomato Suspension Agreement, a pact dating back to 1996 that set floor prices and inspections to prevent dumping. In its place, a 17% anti-dumping tariff landed immediately on Mexican tomatoes. The decision, praised by the Florida Tomato Exchange as a win for U.S. growers, was framed as overdue protection against unfair trade practices. But in reality, it was part of a broader tariff blitz. Earlier that year, Washington had already imposed sweeping 25% duties on imports from Mexico and Canada, sending overall U.S. tariff levels to nearly 18.4% by mid-July, historic highs in modern trade. The consequences were immediate. Mexico supplied roughly 70% of America's fresh tomatoes. With the truce gone, supermarket shelves across the country saw prices surge 30 to 45%. What was once a grocery staple had been turned into a geopolitical pawn. But the ripple effects didn't stop at price tags. Those tariffs reached deep into households, schools, and businesses, setting the stage for widespread fallout. From dinner tables to job losses, the fallout for America. The impact of the tariffs hit instantly, not months later. Major retailers such as Walmart, Kroger, and Whole Foods quickly passed the added costs onto consumers. In border states like Texas and Arizona, tomato prices soared overnight. Even cafeterias and fast food chains felt the squeeze. One Illinois teacher joked that students kept asking, "Where did the red go?" when their salads lost tomatoes. For families relying on SNAP or tight budgets, fresh produce became a luxury. Salads disappeared from plates, replaced with cheaper, less nutritious staples. What began as a trade dispute morphed into a food security gap. Behind the scenes, the damage cut deeper. Dozens of Latin-owned import firms in Florida closed within weeks, wiping out hundreds of jobs across trucking, warehouses, and cold storage. Smaller logistics outfits called it roulette pricing, with perishables arriving unpredictably valued, draining businesses. Border hubs like McAllen and Laredo went silent as warehouses shuttered, gutting local economies. States from New York to Minnesota faced empty shelves and soaring grocery bills. The policy wasn't just farm protection. It dismantled trade lifelines, hitting dinner tables and paychecks alike. And while American consumers and workers bore the brunt, Mexico was already drafting its countermove, a pivot that would turn crisis into opportunity. Quick pit stop. Before we dive into Mexico's bold response, make sure you hit that subscribe button to Highway Herald. Your support fuels our passion to keep bringing you deep dives into the auto world, trade shifts, and the industries powering them. Mexico hits back with strategy, a cold chain revolution. Here's where the story shifts from reactive to brilliant. Instead of retaliating, Mexico outmaneuvered Washington. Within 3 months, agribusiness leaders teamed up with Canadian Pacific Kansas City, CPKC, to launch a refrigerated rail corridor directly to Canada. Picture it, sensor-controlled, 1°C containers carrying fresh tomatoes from Bahia through Chihuahua, rolling straight into Ontario and Quebec. The route? Over 2,000 kilometers of uninterrupted, tariff-free cold chain precision. This wasn't just a bypass, it was a logistics masterclass. The benefits stacked quickly. Shipping costs dropped roughly 15% compared to truck routes across U.S. checkpoints. Shelf life increased by nearly a week, cutting waste and improving quality for Canadian consumers. And here's the game changer. Bonded shipments avoided U.S. customs entirely. Washington's tariffs became irrelevant. Mexico didn't just dodge a punch. It turned the trade fight into an opportunity. By investing in infrastructure and adapting supply chains on the fly, it rewrote the rules of fresh produce logistics. While US consumers paid more for less, Canada became the beneficiary of fresher, cheaper imports, delivered with military-grade precision. But Mexico's pivot wasn't just about logistics. It forged deeper ties with Canada, turning temporary survival into long-term partnership. Canada becomes Mexico's anchor. Contracts, stability, and market share wins. Mexico's response to US tariffs wasn't just rerouting trucks north, it was building long-term certainty. Within weeks, Canadian retailers like Loblaws, Metro, and Sobeys were touring Mexican farms, inspecting soil and irrigation, and signing 5-year supply contracts through 2030. These weren't symbolic gestures. They were binding deals to secure stable flows against Washington's unpredictable policies. As one Ottawa advisor put it, they didn't fight the tariff, they outgrew it. By 2026, nearly half of Mexico's tomato exports, about 48%, are projected to land in Canada, up from less than 1% just 2 years earlier. The cold rail corridor became the backbone of diversification. Beyond tomatoes, avocados, strawberries, and peppers are now delivered seamlessly to Canadian markets. On Canada's side, investment surged. New cold storage hubs opened, like Windsor's facility, fully booked into 2026 before operations even began. Landing costs dropped nearly 8% per crate thanks to streamlined customs and optimized rail logistics. In short, Canada shifted from backup buyer to strategic anchor, thriving on Mexico's pivot. And the story doesn't stop at North America. Mexico's cold chain success sparked interest worldwide, showing how supply chains could outmaneuver US tariffs altogether. Global shockwaves, beyond tomatoes into global trade playbooks. This story quickly outgrew tomatoes. It became a blueprint for global logistics. The Mexico-Canada cold chain corridor is now a case study, inspiring others to reimagine trade routes. In Europe, logistics hubs in Rotterdam and Hamburg are mapping Brazil to Europe cold chain flows that bypass US ports like Los Angeles and Houston entirely. By late 2025, delegations from Japan, South Korea, and Taiwan weren't meeting Washington. They were visiting Querétaro to study Mexico's model. A Korean advisor even dubbed it a blueprint of resilience. Canada advanced the playbook further. Firms experimented with dual labeling under USMCA rules, legally re-exporting Mexican produce as product of Canada. Analysts warned this innovation could spread beyond food, potentially reshaping semiconductor, auto parts, and biotech supply chains. The numbers underscore the risk. One report estimates US losses of up to $69 billion over 5 years if bypass corridors persist. Trade is no longer just about treaties, it's about certainty and trust. Nations are voting with logistics, not politics. Which brings us to the big picture. What started as a tomato dispute now stands as a warning to entire industries. Closing thought, the tomato trade's hard lesson. On the surface, this was about tomatoes. But in reality, it showed how one policy decision can reshape entire industries. A sudden US tariff turned a grocery staple into a geopolitical pawn. Mexico didn't retaliate. It innovated. Canada didn't hesitate. It invested. Together, they built a corridor that rewired North American produce flows. The outcome was clear. US shoppers paid more for less, while Canadians enjoyed fresher, cheaper supply under long-term guarantees. The lesson? When trade becomes a gamble, partners build escape routes. From produce to semiconductors, certainty always beats volatility. And right now, Mexico and Canada are holding the stronger hand. What do you think? Did the US miscalculate by pushing Mexico and Canada closer? Could this model expand into autos or tech? And will US consumers ever see normal prices again? If you found this video insightful, be sure to subscribe to Highway Herald for the latest vehicle updates and in-depth analyses. Your support helps us bring you the best in automotive content. Please leave a comment below to start a conversation. Thanks for watching and see you next time. You can now check out any of the videos on the screen. There's more exciting and informative content waiting for you.